Hi everyone, welcome to Let's Learn Futures webinar. Tonight our topic is 3 key elements to create your unique trading method. So we will break into 2 sessions for tonight. The first 1 hour, our speaker CY Saw Chun Yuan will present his presentation. For the next 1.5 hours, we will pick up your question to answer. This webinar is brought to you by Busan Malaysia and managed by our company Excellent. So, before we start, please check your speaker. If you cannot hear us, please click the 3 dots button at the bottom. It should show that you are using computer or internet for audio. So if after that you still cannot hear us, you got to check your internet connection. Our recommendation is using Wi-Fi. And also please turn off your video. If you are turning on your video, please turn it off. Okay. As we know, our Malaysia internet connection is not that strong, so please turn off the video for better learning experience. Okay, thank you for cooperation. So if you have any question along the way during the presentation, you can just follow this instruction. First, click the 3 dots button beside the chat button, select Q&A and select all co-hosts, and you can start type in your question, send it to us. For information, we will only pick the question in Q&A box. So please, don't put your question in the chat room. Okay. Next, Let's Learn Futures LLF webinar. It is a series. We will conduct it in 3 languages: English, Malay, and Mandarin every Tuesday. So you can see here we have different languages topics. So you just have to pick the topic you are interested and scan here to register. Just pick the topic you are interested, scan here to register. So every Tuesday after you come back from work, come back from study, you just have to come in and learn more about trading. I believe it will help a lot on your trading in the real market, okay? Next, Let's Learn Futures LLF. We also have the online workshop. This online workshop is for those who are really interested in futures trading and want to venture in futures trading. So this is perfectly suitable to you. And this workshop is on Saturday and Sunday. For now, we have English and Mandarin classes for you to choose. So you just have to choose either one. For English, it is on 1st and 2nd of May, 2 p.m. to 5 p.m. For Mandarin, it is on 19th and 20th of June, 9:30 a.m. to 12:30 p.m. So same, you just scan here to register. Scan here to register. For your information, this workshop, you need to attend the first workshop before you can proceed to the second workshop. This workshop, you need to attend the first workshop before you can proceed to the second workshop. Okay, and also this is only limited to first 50 online attendees. Okay, next, before we proceed to the main topic, let's go through the background of our speaker, CY Saw Chun Yuan. Our speaker tonight is CY Saw Chun Yuan. He is a lead trainer of Excellent. He's also a trader, an NLP trainer, and a performance coach. He is a CMT charter holder and he has over 8 years of trading experience in local and international stocks and futures market. He is also a former equity dealer in Kenaga Investment Bank Berhad, a certified master trainer of NLP, certified trainer of NS, Neurosemantics. He's also a performance coach. His specialties are trading system and strategy, value investing, trading psychology, neuro-linguistic programming NLP, neurosemantics NS, and coaching. Okay, so without further ado, let's welcome our speaker CY to present his presentation. Okay, I will pass the control to you. Okay.
All right, can everybody see my slide now, right now? Hi, good evening, everyone. So today's topic is on the 3 key elements to create your unique trading method. And why these three key elements, later on I will go into more detail and giving you a more deeper depth about what are the three things that you must look at in order to create your own trading method. So regardless of whether you are currently trading in futures or going to trade futures someday, hopefully, and this topic is definitely right for you. And even if you're just only just trading stocks, and this topic will also give you a practical insights on how to create your unique trading method in futures trading and how you are going to use this to improve your trading in a later period. Now, before I move on, before I begin to share my topic, is that a quick disclaimer that this session is for education as well as a general purposes only. Of course, there is no investment advice for you to buy or sell or anything. All right. So as our moderator, Junior, he has already shared with you my background. And before I begin, I would like to know how many of you has already trade futures. So this is actually quite important for you to, to understand trading futures is actually a way different from trading stocks because the product is entirely different. So if you do trade FKLI, you can type in FKLI in the comment box. And if you trade FCPO, you can type in FCPO. If you haven't traded futures at all, zero experience, you can just type in no. So I repeat my question again. So if you have already traded in FKLI, you can type in FKLI. If you are currently trading FCPO, you can type in FCPO. And if you have not started any futures trading yet, you can just type in no, so that I can see how can I tailor it so that this topic will be entirely relevant to you. So I've seen some of you trade FKLI, some of you trade FCPO, some of you trade both, and most of you haven't trade anything at all yet. Right. Whether you are currently trading FKLI, FCPO, both, or you haven't traded yet. So this session will give you, hopefully it will provide you a practical insight on how you are going to re-strategize, reorganize, or restructure how you are going to build a trading method that is uniquely for you personally. Right now, as we know, this topic will be we will be covering on four main things. So the first topic will be on the three important decisions that you need to make in trading. And later on, you will see in trading, it doesn't have to be so complicated or difficult at all. It's just only these three decisions that you need to make so that it actually simplifies your entire trading. And the next topic, topic two, will be which is a very commonly asked question by most of the beginners or even new traders, which is what would be the right time frame that actually suits your trading method or your trading style. And later on, we will go into it, and hopefully I am able to solve some of your questions here, right? Third topic would be what is actually the best trading tool for trading. Most people, they go over around and find what is the best trading tools for trading. And some of the traders, right, they spend years and years, 10 years, 20 years, and yet they still unable to find the best trading tools. But in fact, later on, I'm going to share with you one trading tool that is that is actually very special, and it can actually perform well in the market if you use it correctly. And lastly, we will be going through a small simple case study on how you are going to build your unique trading method. All right, so let's get started. Now, when it comes to trading, there are only three key elements that are focusing on your trading approach, which is your trading method. And these are the three main things that actually impacts your trading results directly. So let me share with you all of this. What are the three things first? So the first thing is actually on your decision. So when we speak about decision, right, when important news or fundamental data is coming out. What are the decisions that you need to make in trading? Are you going to long? Are you going to short? Or are you going to do nothing and just hold on and stick with your original decision? You see, especially when the price moves too much, right? Most people get paralyzed or they get stuck and they do not know what to do in trading. So later I will be sharing you the essence of trading with only these three key decisions you need to make in trading. And the next element, second element, is actually on the time frame. So are you actually using short-term time frame, medium term, or long-term time frame to trade the futures market? So whether you are right now using the correct time frame to trade whichever product you are currently trading, whether is it FKLI, FCPO, or FM70. So if you are using short-term time frame to trade, whether it actually suits you or not. And for some of you, maybe you're using a medium-term time frame to trade, right? And whether this is actually the correct method to you. So later on, I will be clarify this doubt and a question most of you might have. And you'll be surprised about how most traders get the time frame incorrectly. And third element is actually on the trading tools. So for example, in the later part, I will be sharing some of the most commonly used trading indicators like simple moving average and Bollinger Bands. So do you know whether you're actually using the correct trading indicators or not? Or which indicators actually performs the best in the market? So I believe this is actually some of the frequently most asked question by fellows, beginners as well as traders. So with all these three key elements, when you do all of these three key elements well, when your trading has covered all these three things wholly, you can actually greatly reduce your trading risk a lot. Okay, I repeat. When you are able to cover these three key elements to build into your trading method, you can actually reduce your trading risk a lot. All right. So these three key elements actually would boil down to the very essence of trading. So you don't have to spend so much time, right? So now I would want to boil everything down to the very essence to it. So you don't have to expect there would be chicken. So now I would be directly giving you what is the chicken essence out of trading. All right. So we will begin with the first thing, which is on the decisions. Now, when it comes to decisions in trading, most people would wonder, when it comes to decision, right, it is very, sometimes for some traders, it could be very easy to make. For some traders, we all know when making trading decision, it becomes very, very hard and complicated because there are too much information in the market out there, right? So most people spend too much time on finding the best strategy in the market. So right now, I want to boil everything down to the very essence of trading. So what are the three major decisions in trading? So the first one is actually on the entry strategy. Entry strategy actually means how you are going to enter the market. In other words, it is your market entry. So where and what specific time you are going to long the market. When are you going to short the market, for example, and which would be the best entry points for you to enter the market, whether is it long position or short position, so that you are able to profit from the market, so that you are able to capture the trend as early as possible. So this is specifically on the entry strategy. And don't worry about it. Later on, I will give you what are the examples of entry strategy and all of this strategy, okay? And the next decision that you need to do in trading is especially on exit strategy. Now, most people, they spend their entire lifetime, 10, 20 years to find the best strategy, the best technique to enter the market. But they have actually forgotten about the most important thing is actually not just only entry. So now I will be covering as comprehensive as possible. So other than being able to enter the market at the right time, you need to be able to get out of the market also as well, right? So that you're able to capture your profit when you have a profit in hand already, or when the other opposite way is that when you are actually having losses, how are you going to get out from your particular trade? How are you going to cut your losses so that you don't have to incur more losses, so that you don't have to, lose money. And then, what would happen? Margin call happens, right? So this is where, brokers will call you up to either call you to top up your money, or to cancel or off all of your position that you have in hand. So this is actually on the market exit, the exit strategy that we need to do as a trader. And the last strategy is actually the strategy of doing nothing. In other words, which is the whole, other than long or short, getting in and getting out, the last strategy is actually on how are you going to hold and completely doing nothing. So this is actually a particular knowledge where you need to have to know when it is the time for you to know, because most of the time, right, when you enter the market, and especially when you have a little profit, you tend to, instead of holding for a bigger trend, longer trend, right, whenever there is a little profit, you will just tend to take your profit very, very fast, and later on you missed out the whole trend, right? So I don't know whether this happens to you or not. So if it actually happens to you in your trading, you can type in on the comment box and let me know whether these are the things which is actually one of the major challenge that you are currently facing in trading, which is either entry, exit, as well as hold. So later I will give you an example. What are the entry strategies? What are the decisions you need to make during an entry? What are the decisions you need to make during an exit strategy, as well as what are the decisions you need to make to hold your particular position, so that you are able to capture a longer trend, as well as much profit as possible. Now, when it comes to trading, here are the few common trading challenges that most retail traders trading. So later on, I will be sharing some of these few common trading challenges that you might, personally currently facing. So some of the challenges here you may be facing all the time. So later on, as I shared, you can count how many challenges or how many problems that you are currently facing in your current trading, so that hopefully later on at the end of this session, I give you some of the solutions that you are able to solve some or many of these common trading challenges, so that you can be more comfortable with your trading, so that you can be more confident with your own trading approach. So the first thing is actually what to buy. So when it comes to futures market, right, generally, although there are many derivative products in Bursa Malaysia, technically for retail traders, we have three general products that we are able to trade. So what are they? FKLI, FCPO, as well as a new FM70. So these are the three trading products that we are able to choose as compared easily. These are the three products that we can choose easily as compared to, if you were to trade the stock market. There are so many stocks out there. 800, 900 over counters for you to choose. So if you were to trade futures in Malaysia, it will be very simple. Only three products. You need to choose one or two of it to trade. So now that you have already find what you need to trade, or what to enter, what to buy, so the next thing comes, the next question would be, when are you going to buy? When are you going to enter the market? What would be the best time for you to enter the market? Now, where is your entry point, you might wondering, and how you are going to enter the market? Whether should you take a long position, whether you should short the market. You might be afraid if you enter at the wrong place, then when the trend changes and you incur unnecessary losses. Does that sound familiar to you? Right. So these are the problems of when to buy. Find the right timing to enter the market. Next would be how much to buy. Now, most people have no idea, or they don't think about how much to buy, right? All they know is buy as much as possible, right? So all they know is if they were to buy more, if they were to enter the market bigger, then they are able to make more money, make money faster, and achieve your goal faster, right? So generally, most people, if you were to buy as much as possible in the market, especially in the futures market, right, most people, in fact, they blow out their account faster than they could from making money. So I'm not quite sure whether you experienced the same thing in the past in your futures trading or not. So if you have, you can share with me whether you have this similar experience. Now, the next common trading problem that most people have is actually when to take profit as well as how much to take profit. Now, this is actually on how are you going to get out from the market. Most people find the best time in finding the best entry in the market, the best entry strategy, but they've forgotten about how to get out from the market. So, or they don't have any exit strategy at all. So once they know how to get in, but they've forgotten how to get out, right? They don't plan their trade of how to how am I going to take profit, or how much profit that you are going to take. Are you going to take, for example, 20 points profit, 50%, 50 points profit, or 10% profit? So how much is enough for you to take profit? So later on, I will solve some of this problem for you, all right? And next, when you are in a trade already, so sometimes if it is not profit, of course it would be you may be facing some minor losses, right? So how much to cut loss in your trade? Have you ever considered about that? Are you going to cut your losses 10 points, 20 points, or are you going to hold until 50 points until tak boleh tahan already and only you are able to cut your losses? Or do you even wait until you were to face a margin call, just let broker to help you cut the losses? So this is one of the thing where you know how to get in a trade, but you do not know how to get out or exit a particular trade, whether you're actually having a profit or a loss. And lastly, is actually on how are you going to hold, as well as when you hold right. A common thing that most people would tell me is that it is very, very hard to do nothing. Just sitting there, right there, doing nothing, whether you are actually having profit or having losses, it is really, really hard to do nothing. So this is where when you have profit, little profit, you might want to take your profit out fast very soon. And then later on, when the market rebounds back or moves even further up higher, so this is where you would say, I should hold a little bit more longer and let ride on to the trend so that I can capture even more profit. And then when it comes to the next trade, and when you have little profit again, and you tend to sell out too soon again. So this is where it is really, really hard to do nothing. So later on, I will share with you how you are able to solve all of these problems. In fact, this problem is actually very minor. And as you do, when you hold a particular position, regardless of whether a long position, regardless of whether it is a short position, most of the time you dare not hold your position for longer period. Am I correct? And because maybe in your past trading experience that when you hold your position for too long, your profits evaporate, your profits get wiped off, or you exit the market too soon or take profit too soon. So this is where so many things, so many information that comes into the market news. What if bad news comes out? What if the economic condition change? What if coronavirus cases increase? What if what is going to happen in US? What is our government going to do about the market? So all of these things are actually what we consider in trading is called the noise or distractions that actually distract you from making a good decision in trading. Am I correct? So as you look at these 9 common trading challenges, in fact, there are even more trading problems other than these 9. So, but I would like to highlight these 9 common, because it's very common, right? 9 common trading challenges for you. So as you look at these 9 problems, can you count how many problems that you are currently facing that in your current trading right now? How many problems that you are currently facing? So there is a score down there. So what is your score? As you count, let me know what is your score. You can type in the comment box below so that I can see what are the things that you need to work on and what are the things that you need to improve on your trade so that you can improve your trade further. So you can type in the comment box below what is your score how many problems that you are currently facing in your trading. So if you have 10, you can type in 10. If your score is 5, you can just type in 5. Right? So let me know what is your score right now. So some of you, I see some of your score is 9, some is 8, some is having 4, some 5, some 4, some 3, some 6, some having a lot of problems. So the score here, I would say, we have a 3. Generally, we classify as 3, right? Easier to look at. So if you are having score 1 to 3, your trading is actually having, just only minor problem, not much thing to work at, but still can be improved. And if your score is actually from 4 to 5, you have moderate challenges in your trading. And if your score is actually from 6 to 9, in fact, you are having a big challenges in your trading. So this is where, if you were facing moderate and huge challenge in your trading, right? I'm sure that throughout your trading process, you might experiencing some discomfort, uneasiness in your trading. Sometimes even feeling pressure in your trading. Am I correct? So later on, I will briefly share with you how you can solve some or many of these problems so that you can increase your trading performance, and that you can trade more confidently and more comfortably. Okay, so are you ready? So as we look at these 9 challenges, in fact, we can just only 3 things that you need to do that you can solve all of these 9 problems. Only 3 things that you need to do. So the first thing on the left, so on the far left, all of these 3 problems: what to buy, when to buy, and how much to buy. In fact, if you were to have or draft out your entry strategy, for example, when you know exactly when to buy, when you know when to enter the market, as well as how much are you going to enter the market. So in fact, when you have formed or built your entry strategy, when you have an entry strategy, you are able to solve all of these problems. You will also not be easily be distracted by other people's opinion about the market. So I know these days, with advances in technology, we have Facebooks, we have a lot of social media platforms, Telegram, WhatsApps. We have too much information, news that is coming in, too many opinions about the market. Some is bullish, some is bearish, some is they have no opinion about the market. So all of these things becomes a distractions, right? And if you don't have a good entry strategy, I believe you most of the time when you trade, right, you can be very easily distracted by other people's opinion about the market. So if you have a good entry strategy, you can just close your ears and just trade the market without having too much of the opinions or view about the market that distracts you, right? And on the middle one is actually on the exit strategy. When you know exactly how much to take profit from the market, when you have profit, how much to take, and I believe most of you take profit too early, and then you missed out a bigger trend, right? So if you have an exit strategy, even if you take your profit after that, you will, there is no regret of taking profit, because when you have a good exit strategy, you will trade accordingly to your own trading plan. You will not have so much of regret of yeah, I take my profit too early, or I should have let my hold my trade longer. So when you have an exit strategy, you can solve a lot of this problem. You will also understand when you face losses, how much points or how much losses that you can take, that you need to cut your losses immediately. So this is where you need to get out from the market immediately in order to protect your trading portfolio, in order to protect your money, so that you don't incur further losses or even get a margin call. And lastly is actually on how to hold. Regarding to this on how to hold, if you have a good back testing, right? If back testing means when you are able to test your entry strategy, when you are able to test your exit strategy. So this is where you will be, simply speaking, is that when you are able to test all of your entry as well as exit strategy throughout the past period, if your strategy works well during the past 5 years or the past 10 years. So this is where you have naturally will have the confidence to hold your particular trade. All right, I repeat, if you have a good backtesting strategy, a backtested strategy, you will know exactly how long you are able to hold your position or any dilemmas that actually influence your judgment or outlook in the market. So whereas you hold your position in the market, right, you will tend to, there is a tendency for you to find information here and there to confirm whether you're actually doing it correctly, am I right? So this is where if you have a whole strategy, you don't really care about what is other people's opinion about the market, and you do not have to be afraid whether if you were to take your profit later or take your profit early or cut your losses out faster. So this is where you will have the confidence as well as being able to hold your position with a comfort, as well as you don't have to get so stressed out when you trade, right? So all of these three decisions are the main thing that you need to do regardless of whatever analysis that you do. The problem is whether you have the consistency in trading of doing this entry, exit, as well as whole strategy with consistency. And this, in fact, is the key to success in trading. So when you have these three key strategies, whatever people say, you will be firm with your own trading decisions, and you can be confident with your own personal trading decisions. You will not be easily influenced by others or even exit or holding your position. Okay. Now, with all of these three strategies, right, of course, we need a way, a method to analyze the market, right? So generally, there are two types of analysis for us to analyze to make a trading decision. And which of these analysis that you are actually currently doing? They are fundamental analysis, FA, as well as commonly used technical analysis, which is TA. So which of these analysis that you are currently using in your trading? Let me know. If you are using technical analysis, you can type in TA. If you are using fundamental analysis in your trading, you can type in FA. So that let me know which is actually your primary method of analysis in order to make your trading decisions, all right? So I see there are technical analysis, some use both technical analysis, not many using fundamental analysis. So in fact, most people use technical analysis, right? So later on, I will share with you why, even with regardless of fundamental analysis, technical analysis, or even some other form of approach of analysis, right, you will still come with this same problem. So there are several challenges in whichever analysis, right? But I will give some of the solutions of how you can solve these challenges. So the first one is actually, before you are able to analyze the market, you need to, of course, equip those necessary knowledge first before you are able to analyze. If you want to do fundamental analysis, you need to equip those fundamental knowledge first. If you want to use technical analysis to make your decisions, you need to equip the knowledge of technical analysis first. So it's like computer, when you want to do things in your computer, right, you need to install some specific program, right? So it is the same thing for us as a human. We need to install certain software, which is knowledge, so that we are able to analyze the market, as well as do research and ultimately make a good trading decision. The next challenge in analysis, of course, is actually when you have too much information to process and digest. So this is after you have already got the knowledge, you know how to do your analysis already. So this is where, okay, you have too much information of, oh my God, how am I going to process as well as digest in the market? How am I going to make a conclusion out of all of this data, all of this information that I have, so that I can make a good trading decision? So too much information is a problem as well. I'm not quite sure about you. If you do have experienced these challenges, number one and number two, this is where you will definitely come into the third challenge, which is, after hours and hours of research and analysis, you are still not able to conclude a decision yet. You still don't know whether you want to long the market. You still do not know whether you should short the market. You still do not know whether you should hold your particular positions or not. So don't worry about this challenge. Later on, I will provide you with the necessary solutions, how you can solve these problems. So now we are going to move on to the solution, how you are going to solve when you spend too much time on your research as well as your analysis. I do see traders where, when they have spent a lot of money in courses, spend a lot of money on books, reading materials, spend a lot of time in doing their research or studying technical analysis as well as fundamental analysis, they would still face the earlier three challenges in analysis. And what you need to know is that the biggest challenge for most traders, in fact, is actually they learn too much. Number two, they have too many tools in hand, and they do not know which tool is actually right for them to use in order to make a trading decision. So ultimately, the objective for whichever analysis or whichever research that you are currently doing is that you need to understand this. Whatever research or analysis you do, it is actually to provide you some good insights or give you some opinion or able to see different perspective from the market so that you are able to make trading decision with confidence. Okay, so I repeat, the ultimate objective of research and analysis is actually gives you information, giving you insights, and ultimately is that you need to be able to make a trading decisions with confidence. Okay, so regardless of, even if you have the best analysis, right, as long as you are unable to make a trading decision of entering the market and then later on exit the market, you're actually not participating in the market, right? So this is where whether the market go up a lot or go down a lot, it has entirely nothing got to do with you. So as traders, as investors, ultimately you need to be able to make a good trading decision. Ultimately you need to be able to make a good investing decision with confidence, so that whatever noise, whatever opinion in the market, they will not distract you from doing whatever you need to do. All right. So now that I've shared with you the first thing, the three decisions that you need to make in trading, which is how you are going to enter the market, the entry strategy, the exit strategy, as well as how you are going to hold. So now I will go into the second key element, which is on the time frame. For example, when you have a short-term time frame, a medium-term or long-term time frame in trading. So to simplify it, whether you are actually doing intraday trading or whether you are actually going to hold your position to do a position trend trading. So for example, most people, they misunderstood about the time frame in trading. Majority of the people, right, they look at which time frame of chart to use, whether they should use 5 minutes chart, 10 minutes chart to trade in order to decide their trading strategy, but they ignore their own personal time frame. So later on, I will be sharing with you how you are able to suit your personal time frame into your trading, because I believe most of you, in fact, is actually trading part-time only, right, not really full-time. So you need to consider your time frame, which is your personal lifestyle, whether you have the spare time to trade or to monitor the market in your trading. So later on, I will be explaining to you how you can choose the right time frame for your trading that matches your lifestyle as well as it matches your work. Now, which time frames that you should use? Now, different people, of course, they have a different perception of time. They have a different time frame. It also includes whichever job that different job that you're working, different career, right? You actually have different time frame, whether you are very free or whether you are quite hectic or busy in terms of your lifestyles. So here I am going to share with you a simple diagram, and this diagram of a time frame is actually, we will be just only focusing on the futures trading on futures context only. It is different from stock market. It is different from stock investing. Okay, so this time frame, this whole framework is actually focusing on the context of futures, and everything in this time frame we will be looking from the perspective from trading futures. So of course, as we know, in trading there are short-term time frame, medium-term time frame, as well as long-term time frame. So let me know which time frame that you are currently right now using in trading. Can you let me know what is the current time frame that you are using right now in your trading? So if you're using short-term time frame, you can use type in ST. If you're medium term, you can type in MT. And if you are doing long-term, you type in LT, so that I would like to know which time frame that most of you would like to trade when it comes to futures trading. So I see there are short-term ST, some is ST and MT, some is LT, some say sometimes ST, that sometimes medium term. That is interesting. All right, now I'm going to share with you some of the definitions. What is short term, medium term, and long term? And of course, when it comes to time, right, time frame, there is no fixed definition. But in here, in this particular slides, I would like to let us be on the same page, so that the time frame that we are referring to, so that you are able to use, how are you going to use this time frame to build your own trading method. So when it comes to short term, of course, there are intraday, which is you will be doing intraday trading. Short term time frames, which also includes days, how many days that you are going to hold a particular position. And of course, there are weeks you are going to trade or hold your position as well. So weeks, it can be, more than 5 days. Is actually 6 days, right? 6 days is already considered as 1 week. So weeks can be go up to 4 weeks, and more than 4 weeks is actually considered months. And months is actually quite overlapping between medium term and long term. We have 1 month up to 12 months, right? So this is a general time frame that I would put. And let's look at what are the 2 common trading styles that we are doing in our trading. So of course, for intraday trading, you will be doing day trading, or in other words, intraday trading, where you will be entering your position on that particular day, as well as exiting and close out all of your position the same day. So which means at the end of the day, you close all of your position and you don't hold anything. So which means whether the market gaps up or gaps down during the next day morning, you are completely stress-free at all. So this is on day trading, intraday trading, where you don't hold any position at all. And next thing is that the opposite of intraday trading, not holding any position, is actually holding position, right? So this is what we call the position trading. So this is where you will be holding your position as long as you could, or depending on how long is the trend is. So in other words, we would also call it the trend trading. So your trend can be a trend that consists of a few days, trend that is as long as a few weeks, or a trend which is a longer term trend that can be go up to months. And when we look about time frame, right, we want to look at what is the trading frequency. So when it comes to trading frequency, of course, shorter time frame, we would have very, very high trading frequency. And if you were to doing long-term time frame or medium-term time frame, as you approach to the right, your trading frequency would be very low. So you don't trade as much as possible compared to those, doing day trading or trading within a few days. So this is where the trading frequency that we need to look at. Now, let's go into the main key thing, is that when it comes to time frame, there are 3 key factors that you need to look at in terms of time frame, so that you are able to build your own trading method. So the first thing is on the commitment, whether you have the time commitment to trade. So whether you're actually doing trading for part-time or full-time, right? So this is where it is not just only time commitment, it also means the energy commitment. What is your energy spent, or whether it actually takes a lot of your attention to trade the market, whether you have the energy to monitor the market closely or not. So for example, if you were to trade the shorter time frame, which has a very high trading frequency. So this is where you need a lot of focus, a lot of attention and energy to monitor the market. Whereas if you're using medium-term to long-term trading approach, you don't need to pay too much attention the market throughout the whole day, because you have your own full-time job, right? So the first thing on time frame that we need to consider, whether you're trading part-time or full-time. And I believe most of the retail traders, you may have your own full-time job. So trading would be a part-time thing that most of us would be doing. And next thing, whether is your frequency, do you want to trade a lot or do you want to trade little? So if you want to trade a lot, it means you also need to be more, you need to spend more time, more energy, more effort in the market. So this is where higher trading frequency of approach, short term, would be suitable for you. And if you do not want to trade so much, or if your current lifestyle, your work or your career is considered very hectic, quite busy, sometimes you need to make a call. There will be time you will be having a business meeting also, or traveling, right? So this is why you might need to choose a lower frequency of trading. Then a medium term as well as a long term trading time frame might be suitable for you. Short term time frame do not suit you because it is actually on the red, which is why I put at the red color, right? Short term, especially day trading, generally it does not suit retail traders. And lastly, on the strategy, whether you are using short-term strategy to trade, medium-term strategy to trade, or long-term strategy to trade. So this is where a lot of people, they make a common mistake, which is they learn medium-term trading, but they try to trade short-term. Can you see the problem in that? They use medium-term trading strategies to trade short-term time frame. So this is where we can see there is a mismatch in terms of your strategy as well as what you're doing. So it's like, when you use screwdriver, right? Your screwdriver, there is a positive as well as a negative sign in your screwdriver. So you use positive to open up the negative screw. So this is where there is a mismatch when your strategy as well as your time frame does not match. So this is where, there will be a lot of discomfort, uneasiness, as well as a very stressful in your trading. So I'm not quite sure whether you might be facing that in your current trading or not. And some people, right, when they learn short-term trading strategies, they try to do medium-term or long-term time frame. So this is where another thing we can see there is a mismatch between their strategy as well as the time frame that they choose. So in short, if you want to trade, you need to use medium-term strategy to trade medium-term time frame, long-term strategy to trade long-term time frame, and short-term strategy to trade shorter-term time frame. Now, lastly, we want to go through the last thing, which is your trading tool. Since majority of you are using technical analysis to trade, right? Then we will be talking about technical analysis more. So on trading tools, generally, when it comes to technical analysis, there are two powerful trading tools that we will be using. So the first thing is on patterns, and the second one is on indicators. So this session, I do not want to focus too much on patterns, because patterns are actually not our primary focus. And here I would like to highlight more on indicators in this webinar, because for patterns means you need to draw lines in your chart, right? So this is very, very subjective. Different people draw very differently. And because of when you draw differently, right, different people would interpret differently, as well as having very different answer. So here we will want to look further detail and focus on indicators. So why indicators rather than using patterns? Why do I prefer indicators rather than using patterns? And this is because indicators are using mathematics to calculate. So while patterns is something that you need to draw. So things that is related to mathematics, right? It is more objective in technical analysis. So people like you and I, right, would interpret the same thing, because as long as you use indicators that is plot on into the chart, we are actually seeing the same thing. So you can see for the details, if you like to learn more about patterns, you can search for yourself for more details, because it takes a lot more time to cover what is patterns in detail. So today I will be covering more on indicators instead. Now, when it comes to price patterns, there are price patterns. Commonly we use is actually candlestick price patterns, where you will be looking of there are specific patterns in candlesticks, so that you are able to make a specific trading decisions. When you see several patterns here, then what decision that you are going to make. So this is on the price patterns. And the other patterns is actually on the chart patterns. So chart patterns, there are two general chart patterns. So the first one is actually on the reversal patterns, where this is actually more on the medium-term approach, medium-term time frame approach, where when you see this price, for example, double top or head and shoulder, so this is where there would be high likelihood when the price is going to change, or the trend going to change. So these are some of the reversal patterns. And another one, which is on the continuation pattern, so that would be radius triangle. So here you can, if you are interested in it, you can search it for yourself, because I want to cover more on indicators. All right. Now, on indicators, there are generally three categories of indicators: trend indicators, momentum, as well as oscillators. So for trend, there are simple moving average, Bollinger Bands. Momentum indicators, there are MACD as well as momentum. Oscillators, RSI, and stochastics. So which of the indicators that you are currently using? All right, I repeat, if you're using SMA, you can type in SMA in the chat box below. If you're using Bollinger Band, you can type in BB. If you're using MACD, you can type in MACD. So if there are any other indicators that you are currently using that are not listed here, you can also type in, because I would like to know, and I'm curious to know, what indicators that you are currently using in your trading, so that it actually helps you in making your trading decisions. So here I see some of you using MACD, some of you using EMA, which stands for exponential moving average, SMA, some using a mixture SMA, MACD, RSI, some use VWAP, ATR. Thank you. So there are, in fact, when it comes to indicators, right, there are a lot of indicators in the market. So here there is a list of indicators from a charting platform. This is only the general indicators, right? So there are about 20 to 30 general indicators. In fact, there are even more than this. There are up to 100, 200 indicators or proprietary indicators. But generally, we just only use a few commonly used indicators that is usable and profitable in the market. So later on, I'm going to share with you why. But when it comes to technical indicators, you need to understand the indicators in depth, in detail, so that you are able to trade well as trade with confidence. Most people, they just plug and play the indicators, right? They just plug and play indicators without having any basic understanding at all. So when they see buy signal, they buy. When they see sell signal, they sell. So this is where when they have zero knowledge or in-depth knowledge about the indicator, right? So this is where they are not firm or confident in their trading decisions, or they don't have sufficient confidence to hold a particular trade. So back to the very important key aspect of a trading method is actually making your trading decisions. Now, let's go on to a brief small case study to build your own unique trading method. So earlier I've shared many indicators for you. Now listen carefully right now as I'm going to ask you this question. Please tell me which indicator is best for you to use. All right. So I repeat, which indicators is best for you to use? You can type in on the comment box below which is the best indicator that you are currently using. And do you know which one is actually the best? And do you really understand those indicators well enough or not? Now, for example, let's say you are going to buy a pair of shoes. Can you tell me which shoes is actually the best fit for you And how among so many pairs of shoes, right, so many styles, how are you going to choose a pair of shoes that is perfectly right for you? Which shoes should you buy? Do you prefer a specific color? Do you look into a specific brand of shoes, or do you look at a specific comfort level of shoes? And sometimes when it comes to shoes, right, it also depends on what purpose that you use for your shoes, whether you're going for casual running or a mountain walk. So how do you choose your shoes? Now, at the end of the day, whether you are going to choose, how you are going to choose your shoes, which shoes you choose is actually based on your own personal choice, right? Your own preference, whatever that actually suits us personally. So it is the same thing when it comes to technical analysis, which indicators is best to use based on our own choice. And you might not agree at this moment, but I'm going to share with you why I mentioned this in a short while. Now, let's play a quick and simple game. So here are 3 doors, and behind 3 doors, there is one diamond behind it. So can you tell me which of these door has a diamond behind? Whether is it in door A, whether is it door B, or whether is it a door C? Which of these diamond which of these door has a diamond behind? You can type in on the chat box below, door A, door B, or door C. So there is no right or wrong answer. You can just, purely guess, since there is only 3 choices, right? You can just, either make a wild guess which door actually has a diamond behind. And later on, I am going to reveal my answer to you. So I see some of you pick A, most of you pick B, and a minority actually pick C. So here, now, I'm going to reveal my answer, and the answer is B. So congratulations for those of you who has B. Some put all doors have answer, but for now, right now, only one door has one diamond. So now, let's say if I were to replace all of these door with respective indicators. So door A represent by moving average, door B by Bollinger Bands, as well as door C with MACD. Again, take a guess. Which of these door has the diamond? Can you take a guess which of these door has a diamond? Whether is it MA has a diamond, BB has a diamond, or MACD has a diamond behind. And later I will reveal the answer to you, and we will see which indicator actually performs the best over the long run. So I see some of you put some of you choose MA, some of you choose MA, some MACD, some Bollinger Bands. All right, let's see. With the respective or specific indicators that you choose, we are going to go through a quick 5 rounds of tests and see which of these indicators perform the best. Now, let's look at the result comparison by first placing, second placing, and third placing. Let's say for year 2016, if you were to choose a moving average, then congratulations to you. A moving average performs the best in year 2016. Now, if I were to give you another choice, whether you would want to switch your indicators or not, whether you want to switch to moving average, Bollinger Band, or MACD, are you going to switch your indicators or not? I give you a quick moment, whether you're going to switch. So now that you have already made a decision, whether you're going to switch, right? So let's see what is the second year performance of your new indicators that you have already select. So in year 2017, MACD performs better, Bollinger Bands performs second, MA, which is moving average, performs third. So here we can see that some other indicators as we move on to following 3 years. Here we can see that in short, different indicators perform very, very differently at different time. Why? Because different indicators, it has its own unique characteristics. Moving average has its own unique characteristics, same as a Bollinger Band has its own unique characteristics. Same thing for MACD as well. So where in fact there is a diamond for all of these 3 doors. In fact, actually every door has its own diamond as well. So it doesn't really matter which indicators that you are using. All of it actually makes money in the market. It is just the degree of making money, how much do they make or how less do they make. So earlier on, I have shared with you which of the indicators, some of it makes very well in some of the years, but some of the year they perform not as well compared to the other indicators. In fact, all indicators, they are equally good as well because of different years, different indicators perform very differently. But for starters, if you do not know which indicators to get started, you can start with a simple moving average. And why moving average? Because it's basic and it's the simple one. Later on, I'm going to share with you why simple moving average. So the first thing, back to this thing, which indicator is actually best to use when you find your shoes? In fact, all of the indicators are suitable. It depends on your personal style, your personal approach. So this is why when it comes to searching indicators, right, you need to find one that is suitable for you, that is most profitable, and the one that actually suits your personal time frame. So this is where each and every one of us, our trading method is actually only unique to yourself personally. No two traders have the same trading method 100%. So each and every traders, they have their own unique trading method. All right. Now, when it comes to finding indicators, right? So why use moving average if you do not know which indicator is best for you to use? So as we know, all of these doors have a diamond, right? All makes money, but the most basic and simple one, right, is actually moving average. So you might think that moving average might not be superior, or it's too simple to use already. But I tell you that, I assure you that even a simple moving average, you can make quite a decent profit from the market. Why? It's because moving average is actually in fact, it's not one of the most, in fact, it's the most widely researched indicator in the market. It has a lot of papers or research published on the tool for moving average. And it is proven that, across many studies, it is proven that moving average is especially useful for trading futures and commodities, because when you trade futures, you can trade two ways, right? Up and down. So you can trade up and down markets in futures. So this is why using moving average can make a decent profit during up and down markets. However, if you are trading using moving average in stocks, it might not be useful, because most of the research paper that publish out there, they concluded that moving average, in fact, is actually best used in consistently performing well in trading futures and commodities. But if you're actually trading both way markets, right, like futures and commodities, then moving average, in fact, it is very, very useful. You do not need to start with complicated indicators that you cannot apply consistently. So in short, moving average is a perfect start for you to use to trade the market. Now, let me share with you a quick what is the workings behind using moving average. So for example, this is actually a moving average line that is plotted into your chart. And the purpose of moving average, other than being able to identify trend, which is the main thing that we want to look at, right? Because only trend we are able to capture the profit from the market. And when you have already choose moving average, other than being able to identify the trend, the next thing that you can look from moving average is actually from the moving average parameters. So parameters, what do we mean by parameters? So for example, here is actually the moving average of 5 days, so which means the parameters is 5, and it actually uses very simple mathematics calculation. So it is actually taking the 5 days of closing price in order to calculate your moving average. And when you are able to calculate your moving average, then this is where when you plot it, all of these figures into your chart, then that is where you get your moving average line. So which parameter is good for you to use when it comes to moving average is that there are a lot of commonly parameters that you can use. For example, MA2, MA3, MA30. But I give you a quick guidance is that these are the commonly used parameters in the market, which is 10 days, 20, 50, 100, and 200 days for moving average. But which one should you be using? And it is because of time concern, right? It is difficult for me to explain to you in this particular session, but it requires a lot of explanation and a lot of back testing to see during the past how well does the specific parameters works or does not work in the past period over the long run. But generally, if you do not know where to start, this is actually quite commonly used parameters that you can use to kickstart your futures trading. But because today I don't have the time, right, and actually you need to backtest all of these parameters to select which is the best moving average indicators for you to use. And of course, in future, if I have the opportunity, I will share more with you. So let's sum it up. What are the conclusions for today and what you have already learned? So there are 4 things that you need to learn that you have learned today, and let us conclude this. So the first thing is actually on the 3 key decisions that you need to make in trading. So do you still remember that or not? The 3 key decisions are the entry strategy, when are you going to buy, how are you going to buy, as well as how much you are going to buy. The exit strategy is how you are going to exit the market, whether you're taking profit or cut your losses out. And the last one is how are you going to hold your trade so that you are able to capture a longer and bigger profit. The next thing is that you need to be able to choose the time frame that suits you. So when you choose time frame, right, you need to find a time frame that matches your trading method. So if you're using medium term time frame, you need to match with your medium term trading approach. Although there is no conclusive answer, because each one of you is very unique, right? I don't know about you, because different people have different time frame to trade, and depends on your personal time frame lifestyle as well. And if you are more suitable to trade medium term time frame, make sure you use medium term trading strategies. If you are doing short term trading strategies, then make sure you're trading the short-term time frame so that there is a good match for your time frame as well as your strategy. So third thing is that which trading indicator is best to use. As I have just highlighted to use, each indicators, right, has its best performance depending on which time. And different indicators, it perform differently according to time as well. And which one, in fact, is best to use. And in fact, it actually depends on your personal choice. But technically, if you were to search for profitable indicators, and if you do not know which indicators to use, you can get started with moving average because it's simple to kickstart your futures trading, because moving average is really, really basic and simple to use compared to all other indicators. It is widely researched for moving average, and it is also proven that it is profitable in trading the futures as well as the commodity markets. And the last key takeaway for you is that as we have already go through the whole thing, the 3 key elements in trading for you to develop and make your own unique trading method. So with all of these things, 3 key elements, this is where you are able to build your trading strategies as well as your trading systems. And this, in fact, has really solved lots of your trading problems already, right? So earlier on, I have already shared with you the 9 most common trading problems that most retail traders face. So when you are able to have a good trading strategy, when you have these 3 key elements in building your unique trading methods, you have already greatly solved a lot of your trading problems, as well as minimize your trading risk as much as possible already. Okay, so that's all for today. And if you would like to learn more or know more or find more content about this, and this is actually our company website, you can go through this in our social media. And before I end this, I would like to share this with you. When it comes to trading, you need to focus on the trading process, right? Not the outcome. We need to focus on our process, our methods in doing the correct thing in trading, rather than focus on, whether is it profit or loss. As long as you focus on your trading process, the profits, the results will take care of itself. Okay, so that's all for my sharing today.
Okay, thank you for CY. That was a great sharing. Wait, I will put up my slide. Okay. Okay, I believe a lot of you already learned from the three strategy, then the whole strategy, exit strategy, and entry strategy. Okay, from the presentation. So if you have any question, you just follow this instruction and put your question up in Q&A box. Okay, so you just go to the three dots button beside the chat button, then Q&A, and go to all co-hosts, select all co-hosts, and you can start typing your question, send it to us. So we will see your question. Okay, so let's proceed to Q&A session. So if you have anything to do, need to leave first, please help us to fill up the feedback form before you leave. This feedback form is a very short feedback form. You can finish it within 1 minute. So before you leave, please help us to fill up the feedback form. Okay? So let's start our Q&A session. Hold on. Okay. I will pick out the first question. How to be consistently positive in trading? I can win 3 days in a row and negative the next 3 days. Okay, so CY.
So whether you can make profit in 3 days and lose consecutive losing in 3 days. Yes, it is possible in trading. And when it comes to trading, right, it is not just only about 3 times winning or 3 times losing, because when we trade, right, we would trading throughout the whole year and many years to come. So just only 3 winning trades or 3 losing trades would not be our primary concern in trading, because winning trades is actually very common in trading. Making losses in trading straight in a row 3 times, 4 times losing in a trade would be very common as well. So what we want to focus in trading is actually at the end of the day, right? Let's say 1 year, 2 years, 5 years, 10 years down the road. On your net overall position, are you actually making a good profit or not? Right? It's like making business, right? So for example, let me give you an example. Let's say we are doing our business is actually doing pasar malam. So not every day we are going to make a lot of money, right? So there will be raining days. Those night market is not going to performing well for some business, and of course there will be days your business would be very, very booming and making quite a decent profit. So trading is the same as doing a business as well. There will be good times and there will be bad times. But what we want to make sure is that as long as we want to look at our trading approach, our trading methods, as well as our strategies. As long as we are able to backtest our trading methods to see whether in the past it works or not, and then we apply it today to trade the market, and that is where we, automatically that is where confidence will come in trading, so that you will not be able to get shaked by whatever noise or distractions that comes to you in your trading.
Okay. Next, can I interpret volume in futures similar as in stock?
All right. I don't quite know whether what is your trading strategy using volume, and if you do have a strategy of analyzing, interpreting volume with consistency, then yes, you can use that to volume interpretation to build into your trading approach to trade futures. But generally, a quick guide is that for professional traders, volume is not quite much of a concern for trading futures. Open interest would be more of a better measurement as compared to volume.
Okay, next, should I use SMA or EMA or any other types of MA?
Right, when it comes to moving average, right, I understand,
Yes.
when you look at the charting platform, there will be SMA, EMA, WMA, all sorts of moving average. Of course, the simple one is, of course, taking the name simple moving average, which is the simple average, SMA. And why SMA is that because when it comes to trading tools, right, we have a lot of MA. The most important thing is actually whether you are able to backtest your moving average, because moving average itself, there are a lot of parameters, right? For example, you can use SMA 2 days, SMA 3 days, up to 100, 200 days. So all of this, if you were to able to backtest and find out which would be the best performing, then that would be the better one for you. For me, regardless of SMA, EMA, or any types of MA, the more important thing is actually go through backtesting and find out whether those particular parameter is good to use or not.
Okay, next one is, when is the right time to Bollinger Band and MACD? I think it's time frame.
Right. When would be the best time for Bollinger Band and MACD? All right, when it comes to Bollinger Band, right, because it depends on what is your personal entry strategy for Bollinger Bands, what is your exit strategy for Bollinger Bands. So as well as the same for MACD, because different indicators, they're even simple moving average alone, right? There are entry, you can build out a lot, one indicators alone. Now, let's say we use simple moving average. We can, come up with various type of trading strategies for moving average alone. So for whether which is the best time to switch to Bollinger Band or MACD, here I am unable to answer you because it takes into a lot of factors into consideration. But let me tell you this is that even with simple moving average, one line only, as long as you are able to test out which is the best moving average, and that moving average, in fact, it can trade across all timelines.
Okay, next one is 2016 to 2023 best indicators ranking refer to FKLI or overall market?
It refers to the FCPO market.
Okay, so the next one is, should we use all SMA 10, 20, 50, 100, 200 as a beginner? So use all.
All right. You should not use all, right? Because if you put all of the commonly used parameters, I believe earlier I put 5 commonly used parameters, right? So if you were to put all 5 lines in a chart, right, it can be very, very messy. And the most important thing, the most easiest thing to start out or to kickstart on using technical analysis is actually using one indicator, and make sure that one indicator you are doing the basic strategy correctly. Okay, don't have to go advanced strategy, just basic strategy correctly. Then you can use either one of the earlier commonly used parameter. Of course, it would be better for you to back test to test out which of the parameters works well in the past.
Next, is it possible to make 5 figures profit per month in FCPO?
Answer is yes and no. Well, it would be difficult to answer this whether can make 5 figures or not, because if you start with 1 million, right? So 5 figures, let's say 10,000 is actually just only 1%. And if you use 10,000 to kickstart FCTO to make 5 figures, which is actually 100%, you know. So it's the question is whether the better, how would I frame this? A better one is actually, you know, whether we are able to produce a consistent return or consistent performance in trading over the long run.
Okay, the next one is for short-term trading, which time frame in charting should I use? Intraday or intra-week for SMA or MACD?
Okay, on time frame, right? So now you are actually referring to which time frame of chart that you should be using. But in fact, for intraday traders, right? Of course, you need to look at your intraday chart as well as your daily chart. But if you are actually doing position trading where you hold your position overnight, right? So earlier you have seen that there are different position trading time frames from days, weeks, and months. So in fact, generally for traders is that you using daily chart, which means that every day closing, opening, high, low, close price is actually good enough to make a trading decision.
What are the different strategies should one adopt for short time frame vs medium time frame vs long time frame?
So what strategies should we be using to adopt short term, medium term, and long term?
Yes.
All right. For it depends on which time frame that you would want to trade, whether you are doing short term trading, medium term trading, and long term trading. So in fact, when it comes to trading, right, one personally for beginners, for those starters, one time frame is good enough already, because let's say we were to look short term time frame, right? Multiple short term time frame add up, it becomes a long term time frame. So for example, for days, when you add up many days, it becomes a month and then a year, right? So trading one strategy, one time frame strategy would be good enough already, unless you would want to, you know, come up with another strategy that combines different types of time frame. So in fact, depends on which strategies, which indicators that you do, then it's hard to answer you as well. So, but what I can say is that whichever strategies that you use, we still able to trade short term, medium term, as well as a long term time frame.
Okay, so let's proceed to the next slide. Thank you, CY, for answering these questions. Then, okay. Before we proceed further, please help us to fill out this feedback form. This feedback form is a very short feedback form. You can finish it within 1 minute. So I will give you guys 1 minute and I won't go anywhere. So you can do it relaxed. No need to be rushed. No need to be rushed. Okay, so just scan this QR code or you can find the link in the chat room. Okay, so 1 minute starting from now. So 30 seconds left. Okay, 5, 4, 3, 2, 1. Okay, time's up. Okay, next, let's learn Futures LF webinar, it is a series. We will conduct it in 3 languages, English, Malay, and Mandarin every Tuesday. So you can see here, we have different languages topic in this table. So you just scan here to register the topic you are interested. So you just pick the topic you are interested, scan here to register. So every Tuesday after you come back from work, come back from study, you can come in, learn more about trading. I believe this will help a lot on your trade in the real market. Okay. Next. After you scan, it will redirect you to this calendar. You just have to focus on Tuesday. You just have to focus on Tuesday because LLF webinar are all sitting in Tuesday. So if the topic you are interested is not in the current month, you can go to this red box, then click the June, or for now is May. So you click, then also you just focus on Tuesday column. Okay. Next, let's learn Futures LLF online workshop. This workshop is for those who are really interested and wanted to venture in futures trading. I repeat, this workshop is only for those who are really interested and want to venture in futures trading. And this workshop is on Saturday and Sunday. For now, we have English and Mandarin both classes. So for English, it's on 1st and 2nd of May, 2 p.m. to 5 p.m. For Mandarin, it's on 19th and 20th of June, 9:30 a.m. to 12:30 p.m. So same, scan here to register. Scan this QR code. So for your information, this workshop, you need to attend the first workshop before you can proceed to the second workshop. I repeat, this workshop, you need to attend the first workshop before you can proceed to the second workshop. And also, this is only limited to the first 50 online attendees. Scan here to register. First come, first serve. Okay, after you scan the QR code, you will also be redirected to this calendar. Okay, so you just focus on the bottom one. You just click the bottom one on this calendar, 1st of May and 2nd of May. Click the bottom one. Okay. So next, Bursa Academy is a one-stop e-learning platform. It is very simplified and user-friendly. The most important is you can access it anywhere, anytime, and at your own pace. Okay, so you just scan here to redirect to this platform. Okay, or you can just type in this link into your browser. So it will bring you to this Bursa Academy platform. Okay. I think any other question? Any other question? Wait, okay. We can take in one more question. From your experience for intraday trading, which indicator is the best with which time frame?
For intraday trading, which indicator is the best with which time frame? Well, of course, when it comes to intraday trading, right? In fact, earlier I've shared with you, in fact, all indicators are quite performing, whether you are doing position trading or any other time frames of trading. And the most important thing is that how you are going to build your trading strategy using the indicators that you are currently having. So for example, moving average alone, it can comes out with 5 to 10 different types of trading strategies. And the most important thing is whether do you understand the indicators that you are currently using with in-depth understanding or not. So why is that important is that when you understand your indicators very, very well, right, even though it is just, for example, simple in moving average, when you understand one indicator very, very well, then you will know when does it work, or when does it not work for your indicator, which time frame works best, which time frame works not so good. So this is where when your indicators does not perform well in, for example, sideways market lah, then this is where you understand that you are able to go through the time when your indicator does not perform well. Okay, so this is where, most of the traders, when they don't perform well or when they make very little profit or losses, right? This is the major thing that affects their trading decision. It affects their trading confidence. So I'm not quite sure about you, but most people would, when they experience this period, right, they tend to keep jumping here and there, change indicators, change trading strategies, change parameters to find out which are the best trading tools again. So this is not quite suggestible in trading, because you might currently having the best tools in your hand already. And what you need to do is you need to understand very detailed, in depth of how are you going to improve on that particular tool in trading.
Okay, thanks CY for answering the last question. Okay, so our webinar is come to the end. Thank you for participating. Then hope you have a good night. Thank you and bye bye.
Bye everyone.
Okay, bye bye.